get to the top stocks of the week that we have watching. And the first one's going to be AZO. And this is AutoZone. And I got to say that this is one that Christian has been pretty big on over the last couple of weeks. And not to say that I'm not a fan of it, but it's just not something that, well, it's unsexy September. And that's and this kind of falls into that category a little bit, but there's definitely some opportunity here for me. Just to kind of give an overview of AutoZone, Tuesday pre-market is when earnings come out for this. Their estimated earnings per share $24.92. I think that they beat and come in at 25.23. That is my prediction for that. Wall Street expects a year-over-year increase in earnings, but lower revenues because obviously the Rona. But I think that we should see some pretty surprising numbers. My thing is that there's probably a lot of people that needed to fix their cars still to get to where they needed to go, whether it's vacation because they don't fly as much or they can't fly or whatever. I think that there still is demand there. And we started to see some really huge increases in demand in used cars when we looked at some of the other used car companies like CarMax and that sort of thing. So this is kind of where AutoZone lives. And I know that, Christian, you got a lot of other info on this as well. So I'll let you take it away.
Yeah, I think the industry is shifting away from buying new cars and people rather fixing up their current cars, and they're getting used cars. So I think we'll hear more about that macro trend, and AutoZone benefits off of that. And companies, like everything I say, actually, if anybody follows O'Reilly, I would say it pertains to it. So AutoZone, O'Reilly, I would say either one. Morgan Stanley recently upgraded their price target, which to 1505, which gives it 25% upside.
That's crazy.
Yeah. Now here's the thing. I think so. It got lost in the mix a little bit, but back at the end of August, the CEO had mentioned that they were adding 20,000 more jobs in all 50 states to handle demand. Okay. So for me, why that's important is because the quarter ended on August 31st. So that means that they were killing it before that. And now why it's important for future, we always talk about forward guidance. Earnings, what you do now, what you did the past 3 months, that's the price that it's at, right? It's really about the forward guidance. And so if you're adding 20,000 jobs, I anticipate a big number moving forward. So 20,000 jobs across the entire U.S. bodes well for the company as a whole. So for me, I'm looking at 25.88 a beat. Okay. And I think we're going to crush earnings and we're going to increase guidance moving forward.
25.88. That's a big number.
It is,
but I think it's definitely achievable. Again, mine comes in at 25.23. So we both have them beating. Now, as far as entries are concerned, you can see that it closed on Friday up to 12/15/31. Now, to Christian's point, I think that, people look at this number and see, oh my gosh, it's a $1,200 stock. But we just talked about how there's the price upgrades that are 25%. So when you think of it as a 25% move, brings a little bit of perspective. That's a huge move that it could potentially go up to. So $1,500, that would be a really, really nice move here from 12:05, 12:15, where it closed out after hours. So as far as entries are concerned, I kind of like this if this breaks up over that 12:15 mark at 12:16, and then we start to see movement back up towards 12:50. I think that we could really see some nice moves on this. And again, leading up to earnings on Tuesday pre-market, I think that tomorrow will probably be a pretty big day for AutoZone. And then obviously we'll wait and see what the numbers look like on Tuesday morning. And we'll reveal those to you Tuesday in our live stream as well. But definitely some high expectations for this one. Moving on, we got Stitch Fix, which also has earnings on Tuesday, but they're after hours. This has been a personal favorite of mine. I love Stitch Fix. They had a tough earnings last quarter, but a lot of it revolved around the lack of inventory because of the Rona. There was just a lot. The supply chain was really what hit them the hardest. And so this one actually has me a little bit concerned again because of that issue. I don't think it's an issue of demand, but I think it's more of an issue of were they able to get the supply chain in order. I still like them. Their estimated earnings per share Tuesday after hours is at a loss for 16. I think that we see a slight beat at a loss of 14 cents. And so we'll just kind of see where that goes. If we look at last quarter, the revenue fell 9% compared to the prior quarter's 22% upswing. And so I think that there could be a bumpy ride. Here's the other thing, though. I think that if it comes out that their earnings next quarter or this coming earnings Tuesday after hours isn't really a huge mover or something that surprises a lot of investors, I think that there's going to be some really good opportunities to get in on Stitch Fix on the cheap, because I think moving forward, it's going to be a huge player in this market. We have people that are staying home and working remotely, and we've already talked about how that's not going away. I think that Stitch Fix becomes a huge player in 2021, and I think that's where they're going to really thrive. I love their CEO, Katrina Lake. If you haven't looked her up, do some research on her. She is just an amazing person and knows how to run this company. And I think that 2021 is going to be a big year for Stitch Fix. Just not sure how confident I am on this quarter just yet.
Wow, that's interesting. I thought you were going to predict a much bigger beat.
No. So here's my thing. I think that they could end up missing. And so my opportunity is after earnings, after that it drops off. So that's kind of where my opportunity lies for Stitch Fix.
Wow. Okay. I think they beat. Loss of 8 cents.
Oh.
So last earnings, I think, took everybody by surprise. And here were the issues that need to be addressed. Not different than Peloton. They had some distribution center challenges, really not so much because of them, but because of the companies they work with. But they had some supply chain issues. So those needed to be addressed with their retailers and cleaned up. And the CEO actually mentioned, like, they're going on the offensive. So that sounded good. Yeah. I don't think you can miss like that 2 times in a row when your company's supposed to be built for these times. Yeah. So those are what's got to be addressed. And I believe they address those things. I believe that, they're in a good position because they don't have physical stores and their models digital. So that's great. They're built for digital growth. The one concern is the subscription service and how that plays into the model going forward. Now that every other company has to do digital, it's not like the big boys can compete against you now. And so I don't know, it's kind of 50-50. It's a coin toss. So I'm going to make a bold prediction. So I think they beat. And I think that I don't think they're going to, I kind of think they're going to go sideways. Yeah. But I think they get sold in 2021. That's my bold prediction.
Oh, you think somebody buys them out? Wow.
I think somebody like Walmart buys them out.
That would be huge.
Their margins aren't great. Like, it's just, their operating margins are tough. And I think with the subscription model, you need cash and a big company that has cash. The model makes sense, but I think as a standalone, it's really hard. Yeah. Yeah, for sure. And just to answer some questions, there's some people that are asking if I'm wearing Stitch Fix today, and this shirt underneath of my We Trade HQ hoodie is in fact Stitch Fix. So this, just to make this clear, I love the company and I have this in my longer term account. I'm just a little concerned about this quarter and see what, and to Christian's point, I think that there's just a lot of questions that need to be answered, and hopefully they do, and hopefully they do end up crushing them. But I still think there might be some opportunities. Looking over the last couple of weeks, we have seen some sideways action, so maybe we'll continue to see that. Leading up to earnings on Tuesday after hours, 27.76 seems to be kind of where pretty solid support has landed for Stitch Fix, and then resistance up here. We've seen this hit several times now at $29 flat, thereabouts. We've seen some spikes up above that, but it really hasn't sustained above $29. And so those are the areas that I'm really kind of watching for. If this breaks below 27.70, 27.75, then it may come down to around 26.30. So that's kind of where I'll be looking to pick some up. So we move this area of support down here.
right here around 26.30. So if it breaks below that 27.75, that's where I'm looking forward to pick some up. But if it breaks up over $29, especially leading up into earnings, if there's a lot of anticipation, then we could see a nice move there. You can make a pretty decent quick flip if you guys are interested in that. But Stitch Fix definitely want to keep an eye on. I'm rooting for them. I love the company a lot.
Now, if they are somehow cash positive, I think they're if they do a big number, this thing could go off.
Oh my God. If they're somehow cash positive, I would be blown away. And I'm sure everybody else would be too. It would be a mad dash for Stitch Fix on Tuesday.
Yeah, we need a
hours.
FedEx style number.
Yeah, right. That would be insane. All right, so moving on.
Next.
We got Nike next, and this is an Own the Chaos favorite. It is a fan favorite. And real quick before I get into Nike, I just wanted to shout out to the 534 that are watching us right now. Really appreciate this. You guys hanging out with us. Let me share my screen. I'll show you the Nike chart, and just kind of looking here at 114.43 seems to be kind of where it has settled out as a support. They have earnings on Tuesday after hours along with Stitch Fix. Like I said, Tuesday is going to be a busy ass day. Their estimated earnings per share is 44 cents. I think they beat this again in this quarter. They beat earnings last quarter. And it's going to be interesting because I don't think their revenue is going to be anywhere near what it was this time last year. But I think that it'll be an improvement from last quarter. And I think they come in at 56 cents as their earnings per share. And
Sorry.
What?
No, I didn't mean to. That's my exact number. My fault.
Oh, is it really? Oh, okay.
Yeah.
That's so funny. All right. So 56 cents per share is what my earnings are on Nike. But sales drove 30% overall. And I think that we see a better number this time around, like I was saying. In fact, I expect this upcoming quarter, which includes the Christmas holiday, to be a record-breaking season for them. So this next quarter, which will be their second quarter for their fiscal year, I think will be a record-breaking quarter for them.
Wow. So
this quarter could be really good for them, but I think next quarter is going to be a really big year for big quarter for them. So 2021, when they report, it's going to be huge, I think. But I like Nike a lot, and I know that Christian has a lot to say about Nike, so I'll stop talking and let him take it away.
Yeah, Steve King's banking on a big day from Nike. Steve, what's your prediction? So 56 cents is what I got. And just so everybody knows, we don't talk about any of our top 5 predictions. We just say, what are the stocks? And then you and I bring them to Stock Watch Sunday. So That's pretty crazy. We got the exact same number. Funny.
Yeah, we don't tell each other what our estimates are going to be until we go live. So that's hilarious. That I was like, what are we talking about?
I know. I didn't mean to caulk. I don't even know what sound I made. But Claudia said she got Nike at $98 months ago, which is when we started putting it on the watch list.
Yes.
It was sub 100 for the record.
For the Chaos Crew folks, we talked about Nike at 98 and said it was a solid buy there. So
yeah, and so I love Nike as a brand. I love Nike as a company. Long term, great. Put it in your long term account and forget about it.
Forget about it.
So forget about it. So this one's tough for me to say because I'm actually not as bullish short term on them. I think they had a good run up. And so I just think there's more downside than there is upside for the short term. Long term, they're great. I think they're positioning themselves for to be the leader for the rest of our generation. They're just doing the things right. And so their infrastructure. So they recently cut ties with 9 of their partner retailers, and their justification was that I guess they wanted to focus more on the premium type persona, and also they're focusing on digital, which they've always been focusing on, direct to consumer. That's their plan, and I think they're trying to really increase their margins, which is a great move, which is a smart move. They already have great fundamentals, but this is only going to catapult them even more. With that said, here's the thing: their online growth is already expected to see triple digits. Okay, so for them, demand should be up. We're expecting demand to be up. They also had some issues. I mean, the stores were closed down last earnings. things, they had some headwinds, and so those should be cleared up. But that's already built in. So as far as direct to consumer, they had double-digit growth. They're expecting triple digits. So how much more can you get? So
Right.
I think that's baked in. They've moved up their digital growth strategy, which I'm very bullish on, where their new CEO is like all about it. And their timeline has moved up from fiscal 2023 to this fiscal 2021. So like this is the first quarter for 2021. So that all is promising for them. My thing is, I think that it's built into the price now. And I'd probably wait a little bit. If you're not already in it, I'd wait a little bit to see what happens after earnings. Cause I like your prediction. I think the next 2 quarters are where we're going to see that move up leading into the next quarter and the following quarter.
Yeah, I mean, and one thing that neither one of us have talked about yet, and we talked about, direct to consumer, but I think more specifically just the e-commerce side of things, and that's why they've moved out of the retail partner spaces, and we're seeing stores close down, which most on the surface people would think, oh, well, if stores are closing down, well, that's not a good thing, and really it almost kind of doesn't matter because everything's going to the way of e-commerce, and we've kind of already talked about how the Consensus Bureau has reported that 20% of retail shopping is still only less than 20% still done online. And so I think the opportunity for growth, especially for Nike, is going to be huge in that space. And that's where they're going towards in this, whatever you want to call new normal. So as far as the charge concerned, I like it at 114. If by some chance we can see it bounce off of there, it seems to be a pretty decent support. And then if we see it break up over 117.50, if you want to play the momentum to that side, I think that those 2 areas are going to be areas to watch leading into Tuesday. And then afterwards, obviously, if it falls below this 114, 113 area, then we'll look for another area of support. Could come down to 111, maybe even lower, depending on how people react to what's going on. If it does not, we'll see this move probably up above 120, which would be an amazing move for Nike, given where they've come from. So those are the areas that I'd be watching for as far as price targets are concerned. And then we have Costco, and this is another part of unsexy September. But this is there's nothing. What's not to love about Costco? They have dividends. They have an amazing company. They have 250,000 employees. And if we learned anything from Walmart, Target, Dollar General, Dollar Tree, all those that we talked about a couple weeks ago, when all those big box stores went through their earnings, it was that they are just absolutely killing it. And I've talked about this before about how well not only are they thriving through or surviving through the Rona and all the issues that were compiled in that, but that they are thriving. And so if you can thrive through something like that, then they're going to become even more valuable out of the gates. And so once things start to recover, so they have estimated earnings on Thursday after hours of 281. I think they crushed these earnings. My bold prediction is $4.01. I think they absolutely kill it. And Costco, maybe they even start to announce a special dividend here soon. It's been a while since they've done one. I think 2018 was the last time that they came out with a special dividend. And if that happens, Costco will go wild. Watch this happen, because I used to work for a financial firm, and one of our biggest client was Costco. Whenever they had a special dividend, people went absolutely nuts. The stock went crazy. I think that because of the way that Costco's been performing, we could see one coming up very shortly.
I was not expecting that number from you. I'm going to keep this short and sweet. It's a great reopening play, great business. The model is actually built for social distancing because it's so freaking huge.
Yeah.
And especially people predicting in the wintertime that there might be a second wave. That bodes well for Costco. 309, they beat.
Ooh, you got 309.
Book it.
I think you'll probably end up coming closer than me, but I was going bold on this one.
I like that. I like it.
I was going bold on it. So, if you're looking for areas to grab this at, this had a pretty steep sell-off with the rest of the market. 332 seems to be like a no-brainer kind of grab if we look at this on a 4-hour chart. And it already kind of made its move a little bit up to 336. So if it comes back down to this area and we see a bounce from there, I think that would be a no-brainer to grab. But my money is on that this probably ends up running into earnings on Thursday. So look for this to run up to 347 or 350 and see if we can break up over that. If it does, we probably end up seeing a really nice move into earnings. As to whether or not you should hold them, obviously we always talk about how risky or holding through earnings are, and this being our last earnings play that we're talking about tonight, just wanted to reiterate that, you know, holding through earnings is kind of a crapshoot. You're really just trying to play both sides of it and not necessarily right in the middle of earnings when they announce. So, you know, a lot of people hold through earnings. I actually ended up holding FedEx, but I played the run up and then held on to some shares just to kind of see what would happen. And so, and I think that's acceptable as well, as long as you were able to take some off the table, make some money, and you know the risk that's involved. So with all that, let's get to the last one here that we're talking about this week, and that is Walmart. And I guess it'll be Walmart / Oracle, because we'll probably get a lot of questions about Oracle too. But Walmart's one that I'm really kind of focused on because of the TikTok deal that was announced that is pretty much done. It's a done deal. You know, the cumulative stake that Oracle and Walmart will be taking, according to Motley Fool, is 20% of Oracle, and that 20% of TikTok. The Oracle will get 12.5%. Walmart will get 7.5% stake. And this is a huge, big deal for Oracle and Walmart. It'll be interesting to see if they agree to terms as far as valuations is concerned, because I think TikTok came out and said $600 billion is where they're planning on evaluating their company. So then that would mean that Oracle would have to cough up around 75 million, I think, somewhere around there. And so then Walmart would have to come up with, whatever pennies as far as they're concerned. They just reach in their back pocket and pull that out. But I think it's going to be a bigger deal for Oracle to come out with the money to try to, make them happy as well.
Yeah, this is going to be interesting. Oh, run around Walmart. Oh, Walmart running around with everybody in town.
It's crazy. If you had asked me who was going to be merging with TikTok, the last two companies that I would have thought of would have been Oracle and freaking Walmart.
Yeah, for sure. We've talked about Walmart as a hedge play. It ended up working out. Will it move as much as Oracle? Maybe not, but I think over time, this is a great play as we reopen. They're going to benefit from reopen. They should benefit off of this in general. And then reopening, they have their Walmart Plus. They have a lot of catalysts in the works. Whereas I don't see the same thing from Oracle. This is nice short term. But I feel like the competition is so heavy for Oracle. They're not best in class. So you know how I feel about that type of stuff. I don't think you can go wrong with being in either one of them right now, but I like Walmart as the one to go for.
Yeah. And Aleem, I see, said 60 billion. Yeah. So I think I said 600. I didn't mean to say 600. 60 billion, I think, is where they're trying to get their company valuated at. So just a little bit of a misspeak there. And again, so I like Walmart just because Walmart's a better company. And I didn't realize this, but Walmart has one of the largest databases in the world. And so if they can lean on TikTok to kind of reach out to the younger side of their demographic, I think it's going to be a huge opportunity for them, and it's going to allow them to compete with Amazon, because I think that's probably going to end up being their biggest competitor in the retail space, period. So it's going to be huge for them.
Yep, and it'll be interesting, but I think that overall, I don't know how much this matters when you think about 12.5%, 7.5%. I don't know. I mean, we'll see. Next year will be an interesting year. But either way, we still earn those likes and subscriptions, didn't we, Brad?
Yes. Man, we got 600 concurrents in here. You guys are amazing. So we got over 600 folks watching live. If we get those likes up, just kind of help spread the love a little bit and support the channel. Certainly would appreciate it. We're at 150. And so certainly would appreciate it. And that is the top 5 stocks that we are watching this week. So if you guys want to tune in and hang out with us during Battery Day, again, that'll be on Tuesday. Make sure you hang out with us. It'll be going live at 2 p.m., maybe earlier. We'll see. And we'll be hanging out until God knows when.